We've paid $21 million or $21.5 million of dividends in less than 4 years back to UK shareholders and global shareholders.
Do you feel you have to pay a dividend because you're small and because of the Russia component?
Russia has no history of expropriating mining assets. We are a small producer, we do want to grow, but we're focused on profitable ounces, not just ounces for ounces' sake.
But those profitable ounces don't give you growth.
It would have been very easy for us to raise money at north of £1 last summer, and we had banks crawling all over us, and we politely declined because it's about doing the right thing. We want to convey that transparency. We want to convey and deliver on openness and information sharing, and we're very happy with that.
Hello, welcome to Crux Investor. We're here today with Stewart Dickson, who's an NED with Trans-Siberian Gold, listed here in London. How are you?
Very well, thanks.
Thanks for joining us.
Yeah, pleasure.
So you're just telling me you're the only director or NED based here in London. The rest of the guys are spread out around the world. How did that come about?
It's a function of two things, really: our ownership and our expertise.
Right.
The seven-person board, all with direct experience of Russia, and the majority of our directors have lived in Russia, speak Russian, and have residency in other locations as well as Russia. So,
brilliant. Okay. So we're going to talk about the Russian component in a second, but why don't we kick off 1 minute summary for people new to this, and then we'll take it from there.
So Trans-Siberian is an established gold producer. We've been in production for 9 years now. This will be our 9th year of production. We're in the far east of Russia, which is a 9-hour flight from Moscow. So we're in the same time zone as Auckland. So we're a long way away from most things, but it's a very prospective area and has allowed us to develop the AISC gold mine since 2011 into a 40,000 ounce stable production and dividend paying company.
Right. Which is an important part. We'll also talk about that. So, Russian gold. I know one other POG here in London. Why did you guys list on the London Exchange?
So the company listed in 2003 on AIM with a portfolio of Russian assets, and I think probably when you look back at that time, that was still probably flavour of the month. A lot of Russian companies, a lot of former Eastern European companies were listing in London. We still feel very comfortable with not only our operational jurisdiction of Russia, but also our London listing. We're just solely listed in London. We're not listed anywhere else. Right. And we find it works well for us. It's appropriate for where we are. And so,
meaning what?
Well, in terms of the size, scale, and market cap of the company, and it's something that hopefully as we continue to grow, we'll be able to keep under review.
And has that been a problem for you, the whole kind of Russian connection? Well, the fact that you've got Russian assets, not Russian connection. Because I know when, in my banking days, if someone said Russia, we walked the opposite direction. It was kind of problematic. And I think with retail investors, family offices, etc., are you getting that same kind of pushback or feedback?
I think there's some myths and misconceptions around Russia.
Like what?
Well, let's. I always kind of say let's look at sovereign risk as how's it going to affect your business. And in the mining and resources industry, I think there's 3 key areas you really need to look at. One is have you got secure assets, a license, and your physical base? Is the country going to expropriate your asset? Number one. Number two. Can you repatriate capital? Do you have free flows of capital in and out? And thirdly, how are your staff? Are your staff well treated, and is it a safe and secure environment for them to operate in? Because without your asset, without capital, without people, you don't have...
Go on, answer those questions then.
So we feel very comfortable with Russia as a mining jurisdiction. Russia has no history of expropriating mining assets at all.
It's on the LSE.
To the best of my knowledge, ever. Privately as well. We do not know anecdotally of where the state has intervened to expropriate a mining asset. Okay. Oil and gas, slightly different, and there are some well-known case studies where the state has intervened. We also produce gold, which is a strategic asset for the Russian government. The Russian government's macroeconomic policy, and particularly its foreign exchange policy, is largely driven by a gold-backed ruble. And so it's now one of the world's largest purchasers of gold. So we produce a product which is strategic to the Russian government. So why wouldn't they want us to continue to do it? Secondly, I talked about capital flows.
Yeah.
We are a significant investor in the Far East of Russia, and the Far East of Russia is an underdeveloped region of Russia. So they're very keen that we continue to provide capital into that region, invest in that region, because again, it's supportive of a macroeconomic policy and a regional economic policy. So that's capital in. Capital out, we've paid $21 million or $21.5 million of dividends in less than 4 years back to UK shareholders and global shareholders. So we have no problem moving capital in or out. And thirdly, security of staff, making it a safe and secure environment. We're absolutely comfortable with that. We have a 100% indigenous workforce, no expats, fly in, fly out arrangements. So it's something we feel very comfortable with.
Okay. So do you feel you're 38 to 42? Well, how many ounces are you producing?
So we've given guidance for 2020
of
38 to 42.
Right. Okay. So which is, I'm going to say small, and I don't mean that in a derogatory way, but you're a small producer, okay?
Sure.
And you're producing cash, so that's a good thing. So I'm not being negative, but do you feel you have to pay a dividend because you're small and because of the Russia component? Because I look at other companies producing similar amounts to you, they're not dividend paying, they're reinvesting for growth and trying to build this company into, bigger than some of its parts. So is that a conscious decision to get people to continue to look at you and even pay any attention?
I think there's a number of motivations why we do that.
Right.
One is financial discipline. At the end of the day, we're a business, and we have investors who are out and out financial returns investors,
right.
And so they expect a return on their investment. And there's been some very patient capital in the company, and we think it's only correct to reward investors who've been on that journey. We think, to your point, it does differentiate ourselves in a positive way, and we're very happy to be differentiated like that with a very high payout ratio and dividend yield. To some extent, it does mitigate people's concerns, because actually it takes away that myth of, there's a risk around capital, there's a risk around the company, because the evidence and the reality is we pay people money back. So actually it does ameliorate and mitigate people's views. And I think, coming back to being a small producer, we are a small producer, we do want to grow, but we're focused on profitable ounces, not just ounces for ounces sake. And I think I worry when I look across certain elements of the industry.
Okay, well, talk to me about your AISC then, because you're indicating around 900 to 1,000, which is a big range. Okay, right? You want to be towards the 900, obviously, but you're not there yet. So profitable in today's environment, but what are you going to do about driving that AISC down?
So I think I just draw your attention to, we've been 850 for the first half of 19, and obviously we've got full year numbers of 19 to come out shortly.
Okay.
900 to 1,000 is our forecast for 2020.
Right.
That's up year on year against the 850 number slightly. Why? Because we're reinvesting in Asacha's mine life. So we have a very aggressive $7 to $8 million drilling program. So that really is investing in the current asset resource base to expand the resource, extend the life of the mine, and continue to pay dividends going forward in the future. Let's talk about margin,
please.
Because that's what it's all about. And 1650, 1660 is a great golden price environment, and frankly, anybody could make money in this, or they should be able to.
Surprised.
You should be able to make money. But we've plotted our 2020 guidance against our gold peers, and we feel very comfortable we're in the bottom third of that of the curve. And when we're looking at, say, a 1,500 margin, we actually model very conservatively a discount 2 spot. You'd expect us to say that. And we've been profitable for a number of years, so in a lower gold price environment. So we feel very comfortable around our cost control. We're on a 40% EBITDA margin. We think that looks attractive by any measure or in any industry, and we continue to do the same.
So it does look attractive, except when you look at your share price, which has been free fall since gold started going up.
Yes.
Do you know why?
Yes.
Okay, good news.
Well, we think we do.
Well, if you know if you don't know what's broke, you can't fix it. So
Yeah,
that's good.
So summer last year, the market were beginning to take a bit more notice of us. We'd made our 7th or 8th consecutive dividend payment. Operations were really beginning to hum in terms of efficiencies, and we've gone through a program of trying to do that, and successfully had done that. And then we got so our share prices started to move, and then we got a tailwind of a very strong gold price moving through a 1,500 psychological barrier. So we were up to north of £1. And then in our interims in September, we produced a very strong set of interims, but we also said that we had felt that our resource statement was overstated, because we were noticing variances between our resource and what we were mining. So we were very much on the front foot saying, hey, we think there's a problem here. Let's be open about this and let's disclose it. We gave guidance that we felt that actually what this meant was a 4 to 5 year mine
so
life.
meaning what, in terms of the size of the resource or the grade?
The size,
right?
Or contained ounces, basically.
Okay.
So contained ounces, which then fed into how long is this operation going to continue for?
Okay.
So we signposted that we felt confidence around mining up to 2024 based on what we know without any exploration, and that we will clarify that. We clarified that with a formal JORC reappraisal in January this year. And at the same time, whilst I think quite rightly some investors felt that there was a little nervousness, a little disappointment around our resource, that we did have one of the funds, small funds, wanted to exit the position, completely unrelated to what was happening with TSG. They have other motivations for realising some of their own investments. So we got a double whammy, Q3, Q4 last year, and we've seen that recover to some extent in Q1.
Well, that's a stretch, isn't it? Hasn't recovered. So what are you going to do about it?
Well, I think the key. I think there has been some modest recovery, albeit in today's last 24, 48 hours environment is challenging for anybody right now. What's in hand is what we've really signposted is we've got a very aggressive drilling program to extend and upgrade the resource of the Sacha, current operational mine.
Get back to where you were.
Get back to where we were.
Okay.
And
what's that going to cost you?
Well, we've allocated $7 million for that.
Okay. So you're fixing a problem. Well, it's going to cost $7 million, but at least
fully funded, no problem.
No, see, I buy all this. I guess the thing, what I'm getting at is that at least you're being honest. Do you feel frustrated that this honesty has been penalised? Because again, we talk to some of these companies who don't really kind of choose that route. They prefer to ignore.
For us, honesty, transparency is non-negotiable. I mean, it'd be. I know exactly the kind of practices which certain companies choose to adopt. It's just not an option for us. It's not in our DNA. It's not in the individuals that lead this company. And we'll say it as we see. It would have been very easy for us to raise money at north of £1 last summer, and we had banks crawling all over us, and we politely declined because it's about doing the right thing.
Okay, so let's come back to doing business. You talk about we're a business. We want profitable ounces.
Sure.
We'll forget about the share price, but those profitable ounces don't give you growth, and that is the kind of sentiment and excitement that gets people going. M&A activity. So you're in far east of Russia, far away from here. You're a small producer, profitable, but what are you going to do to kind of bring the excitement back into this story? Because you're having to deal with, obviously, as you say, sort of difficult Q4, Q1 this year.
Sure, I think we're actually a growth company and a dividend-paying company.
Okay, I understand the dividend bit. Give me the growth bit.
Let me talk you through the growth story.
Yeah.
Well, firstly, we think that the ounces at Sacha can be upgraded and expanded first of all. So that's growing our resource base.
How?
Through the drill bit at Sacha. We bought a second development asset last year called Rodnikova.
Right.
Which we bought for $3 million, and that is located 50 kilometres down the road from Sacha. And we have proved a JORC compliant resource of 1 million ounces contained at 5 grams per tonne on that. So that's the development asset, and we think that's a very smart piece of deal making, buying 1 million ounces for $3 million.
That's good.
Where there are obvious operational synergies to our existing operations. And as we very publicly stated, the third limb of our strategy is corporate development. We are in a fortunate position where we have access to capital, where we have strong, stable shareholders, we have strong banking relationships, free cash flow. So we are looking, we said that we will make selectively accretive acquisitions. The fact that we haven't made a big bang transaction just yet probably tells you how selective we are.
Well, it tells me how competitive the market is and how expensive it can get if you don't have that attitude. I get that. So where's this money come from? And I know you've got cash flows, great, but that only will allow you to borrow so much cash or raise so much cash. So what sort of quantum are we talking about? What does the profile of this potential M&A look like?
So let's talk about the profile. What are we looking at? Probably like most people, they're looking for advanced development, early stage production. We're comfortable with small scale production. It's a core competency for us. Again, focus on profitable ounces rather than large scale ounces for any other reason. How much are we looking deal value wise? I think we're looking at something that's manageable for us, from existing resources, cash, debt. Trying to put a number on that, we feel it would be a percentage of our current market capitalization rather than a recapitalization or something like that.
Okay, so thinking small, maintaining this mentality of growing organically, but also making small accretive acquisitions, which slowly build the story. So there's no big event going to happen anytime soon. That's not your mentality.
No, ours is a very disciplined approach to not overpaying, to growing the company in a stepwise, logical way, and that is again reflective of large, long-term, patient, supportive shareholders.
Who, by the sounds of it, need to be very, very reliant on this dividend-paying activity of yours rather than growth through share price.
No, I think we're undervalued, and I think you'd expect any management team to say they're undervalued. But it's empirical with us rather than emotional, would be the first point.
Right.
When you look at the growth upside in the share price, we see a number of value drivers in what we're doing. Drilling results, we're scoping study on Rodnikova will be coming out by the end of Q2. You'll be seeing some financial results in May, which we've already given guidance on the dividend coming out there, and I think giving that comfort again that we're providing yield, and then as I said, we do expect to be able to bring in selective acquisitions at the right time.
These in Russia.
I think we've got a very clear matrix about what we're looking at. Russia is core competency. Our largest shareholder's got 2 decades of investment experience in Russia as a multi-asset manager. We know how to operate there, but I think we're also very cognizant of the fact that assets can't always be geographically constrained. So we look at the ability to operate in jurisdictions. We have a very clear matrix of what we're looking for. And when we look at geography, if it is ex-Russia, then we look at how would we be acquiring something with a management team, an operational staff that would be complementary to our own, but also being able to operate in country as well.
How do you do it? We talked right at the beginning, from the outset, you've got directors all over the world. This is desk management. How do you get together and control all of this? You've got an operational team in country, I get it. But there's some decision making that's got to happen. What do you do to get on a weekly phone call or something? I mean, how's it work?
Moscow is our center of, is our hub for board.
Who's there?
So our largest shareholders are based there, and our largest shareholders have 3 board seats in the company because they own 70% of the company in aggregate, over a number of different funds and individuals. So they are all in and out of Moscow regularly. There is our CEO and COO are also based in Moscow and obviously transfer backwards and forwards to the Far East. So Moscow is very much centralized decision making. It's our hub. We have our ecosystem around there as well as in the province of operations.
Okay, so I mean, 70%, that's a big number, right?
Sure.
So how does that affect liquidity, trading, volumes, etc.? Is that something you're conscious of as a concern?
100%. And if you look at some of the statements that we did last year, I guess we did a buyback last year of a partial buyback of funds from Private Equity Fund 1 and a fund management and a family office, which allowed us to begin to order our shareholder register.
Right.
Both United Financial Group, our largest shareholder, and also Trans-Siberian as a company, recognise that having a limited free float is suboptimal for both parties.
Yeah.
So we're working hard about increasing that free float, pushing it into new hands. And as I said earlier, when we Q3, Q4, we had one of the smaller funds sell out through that period. That put another 4% or so into the market. And we, whilst it was you never want to see somebody leave the register.
Did they tell you when they were going to do that? Did they give you a chance to buy it? No. Okay.
They had their own motivations for doing it, and we would have liked to have managed it in a slightly different way. And if you look at how we managed the buyback, that gives an indication again of that discipline and that very orderly way we like to conduct ourselves. They chose to do it on market. That's their prerogative as a shareholder, and we would have done it differently, but it's allowed us to put 4% in. That's now the past. Trading volumes as a consequence have risen.
So they could be better, right?
Excuse me?
They could be better.
I think everybody could be better.
Right.
Everybody wants more liquidity, but liquidity for liquidity's sake in itself doesn't produce anything. It's not of any value. It's only on an attractiveness of a share to come in and out, right?
Well, if you're going to go and raise some money, it's essential, right?
Of course. So we're pleased with the direction of travel. We know we've got more to do, and I think if we were meaningfully trying to increase our volumes, then we would need to change our ownership.
Is that going to happen?
Well, I think it's something we keep under review. Obviously, we have major shareholder representation on the board, and we are looking to manage our shareholder base in a very careful and considered, disciplined way, as I said.
That must be a tricky conversation.
Not really, because everybody wants the same thing, which is value creation underpinned by yield.
Well, sometimes, again, we've spoken to a couple of companies on AIM who have got very large shareholders who own a very large percentage of the company. They don't actually understand necessarily why they're public, let alone how the trading component helps the company operate or raise money effectively. So I think it's not a given. That's why I ask.
Well, I think we're very fortunate in the quality of our shareholder. I mean, they are, as I said, multi-asset managers, financial investors. They're not sector mining investors. They're Russia experts, and they are motivated by return, and they're motivated by looking after their LPs in turn. So we have very frank discussions around what's best for everybody like that, and they see. But nothing. They're not in a hurry. As I said, they've kind of been in this company for a long time, seen it through some challenging times during construction, at a time when there wasn't a lot of capital to build mines, and that's why they've got such a large shareholding, is because they put money into the company during difficult times in 08, 11 when construction, and then first pour in 11. You had GFC and then end of the super cycle. They were there.
So how much are these guys ripping out of the company at the moment in terms of management fees, consultancy fees, etc.? Because I get they own a large chunk of the company, but they've got the ability to pay themselves a lot of money. So what's the total management fees being taken out of by the directors?
So the 3 directors are in the minority on the board. They are paid the standard AIM market rates for directors' fees as a non-exec chairman and two non-executive directors.
Work at standard, just so I understand.
Well, we benchmark it annually, and we use industry standards for that. So it's all in the annual report. So kind of 35,000 sterling, 50,000 sterling for the chairman. Those kind of orders of magnitude. Again, nothing that's out of kilter, and we have a separate relationship agreement with UFG, as required by best practice under the QCA Corporate Governance Code. And we have a separate, under that arrangement, we pay $150,000 US to UFG for some of the value add services which they provide to us, which is, in certain instances, they provide us support. They add a lot of value to banking relationships, connectivity in stakeholder management through the fact that they've been there for 2 decades. Which, so if you add all that up, it's kind of a $200,000 dollars or so. So it is not a feeding frenzy at the expenses of other.
No, I do find with.
But you're right, there are instances of this.
Oh, there's so many. But I find that with companies with Russian assets, if listed on AIM, they actually behave better than anyone else. They almost have to be whiter than white because of the reputational, the legacy reputational issues that exist and perceptions that exist. Sure. So, you know, I think it's a fair question, and I think well answered. Okay. Are you buying shares?
All the management team bought shares last year as part of the buyback and secondary sale.
Right.
So 6 of the 7 directors are shareholders in their own name.
Yeah.
Some of those directors are significant, substantial shareholders in their own right.
Right.
And certainly at these levels, it's a conversation that we've had whether directors should be buying and can be buying. Now we're about to get in a closed period for various different things, so it's quite tricky to follow the corporate governance code and be compliant with that and buy currently. But if these prices persist, then I think you could expect to see directors buying. Okay,
so you know where the share price was hit. You're telling me you do, and you believe those reasons to be true. What are investors saying to you? What is the board saying to you? I know you're an NED, but you also have some. What are the other things that you do? You did tell me earlier. What are the other things you're responsible for, even though you're an NED?
Well, because I'm London based and because of my background, investment banking, that I'm kind of principal point for dealing with equity capital markets and investor relations here in London.
Right. Okay. So what's the board highlighted as the issues that they need to deal with? Not just necessarily to get the share price back up, but clearly that's a driver. But in terms of actually delivering this growth story, not talking about it, actually delivering it this year. And I get the potential for M&A and the potential for being able to raise reasonably priced capital, etc. But what are the things you're actually going to do that you know about today?
Well, I think it comes back to things we can control.
Great.
And that's really then an operational focus. So let's look after what we can control operationally, and that means delivering on attractive ounces, profitable ounces being produced. It means extending the life of the main zone at Asacha, bringing on the east zone of Asacha, which is we've did, upgrading the resource at Asacha, delivering on the scoping study of Rodnikova, and then really beginning to advance how we're going to bring Rodnikova, our second asset, into being a second mine. And I think those are things that are broadly within our control, that we can deliver on in 2020, and I think shareholders and the markets can expect to see significant progress on.
Great. And telling the market what you're doing.
Well, I'm pleased with what we've done over the last 2 years. We've had a change of management, a change of leadership in 2017, and I think you can see very much a before and an after. That said, we're always cognizant we've got more to do, and as you rightly say, we want to convey that transparency. We want to convey and deliver on openness and information sharing, and we're very happy with that.
Mm-hmm. Give us a handshake. That's brilliant. Thanks very much. First time for us hearing that story.